Today, we're exploring 5 key investment areas for 2024. Get comfy and let's get right in. Investing in 2024 isn't just about picking the hottest stocks or buying property. It's about crafting a strategy that matches your goals, your comfort with risk, and your timeline. Whether you are new to investment and have been at it for years, this guide will give you the tools and insight to make smart decisions. Let's break it down into 5 key areas that you should focus on to maximize your returns and build long-term wealth. Let's kick things off with the most important investment you can make in 2024 yourself. As Warren Buffett said, your education is the best investment. Because the more you know, the more skills you have, the more valuable you become in the marketplace. Knowledge is an asset that only appreciates over time. Whether you are learning a new programming language, taking marketing course, or even mastering the art of public speaking, every new skill you acquire adds to your value in the job market. Imagine spending $1,000 on programming course. That course could unlock new job opportunities and boost your income. It's not just about the immediate return on investment, it's about positioning yourself to long-term financial success. But investing in yourself isn't just about taking courses, it's also about having the right mindset. Are you curious? Always looking to improve? In today's fast-paced world, being adaptable and eager to learn is more important than ever. The job market is constantly evolving, and those who can quickly learn and apply new skills effectively will always be in demand. So, where you should invest in yourself to get the biggest bang to your buck? Learning data science or IE could be a total game changer if you're in tech. These fields are booming, and companies will be willing to pay top dollar for these skills. Not into tech? No problem. Consider owning your leadership or project management skills. These are universally valuable across all industries and can significantly boost your career prospects. And don't forget the soft skills. Communication, problem solving, and emotional intelligence are just as crucial as technical know-how. The return on investment here might not be immediate. Still, over time, these skills will help you navigate the complexities of the workplace and open up new opportunities. Don't skip up self-improvement. Read books, attend webinars, take online courses, wherever it takes to make you a more valuable asset. Next, let's chat about index funds. If you're not a finance expert and don't have time to research individual stocks, index funds are your go-to. Think of index funds as a way to buy a little piece of all the top companies in the US. It's like betting on a horse that consistently places on top 5. Simply put, an index funds allows you to invest in the top 500 companies in the US all at once. As the economy grows, so does your investment. It's a slow and steady approach, but over time, it's proven to be one of the safest and most reliable ways to grow your money. Take VOO or CPY for example. These are 2 of the most popular index funds that let you off the slice of the biggest companies in America. Investing in these funds spreads you trick across many companies rather than putting all your eggs in one basket. What is the best thing about index funds? They are super simple. You don't have to worry about picking the next Apple or Google. You're investing in the entire market, which has historically gone up over the long term. Even during economic downturns, the market has always recovered, making index funds a resilient choice for long-term investors. Index funds also have another big advantage: low cost. Unlike actively managed funds where you pay a manager to pick stocks for you, index funds simply tracks the market. This means lower fees and more of your money stays invested. Over time, these savings can add up to significant gains. And what about diversification? By investing in index funds, you're automatically diversifying your portfolio. This reduces risk because even if one company in the index doesn't perform well, this is balanced out by others that do. It's a simple, effective way to invest without spending hours analyzing individual stocks. So, index funds are the way to grow your wealth if you want a stress-free way. They are a set it or forget it kind of investment that can give you solid returns over time. Now, let's talk real estate. We all know that real estate has always been a popular investment. But what if you don't have the cash to buy a property outright? In 2024, you have other options like REITs, real estate investment trusts, or crowdfunding platforms. REITs let you invest in real estate without a hassle of buying property yourself. You're putting your money into a company that owns and manages income generation properties. And the best part, REITs typically pay higher dividends because they must distribute 90% of their taxable income to shareholders. Take V&Q, for example. It's a popular REIT that gives you a slice of many different real estate assets. It's like owning a bit hundreds of properties across the country without headache of being a landlord. If crowdfunding is more your style, platforms like FinRise let you team up with others investment to get in a real estate projects. You can start with as little as $1,000 and still get some real estate action. The key here is that your money is investment in physical assets, which tend to appreciate over time. But remember, real estate isn't as easy to sell as stocks. You can't just sell a house in a day. So if you're okay with chopping up the money and owning the piece of the property market, real estate through REITs or crowdfunding could be a great addition to your portfolio. And don't forget the tax perks of real estate investing. You could benefit from mortgage interest, property taxes, and depreciation deductions depending on your situation. These tax breaks can make real estate even more profitable. In 2024, real estate is still solid bet, especially as the market calmed down after the pandemic. Let's talk about creating a stream of passive income, and one of the best ways to do that is through dividend stocks. These are stocks from companies that regularly share a portion of their profits with shareholders. It's like owning a rental property, but instead of collecting rent, you're collecting dividends. Dividend stocks are great because they give you a steady income. You can reinvest it to buy more shares, and over time you can really add up. It's a classic strategy for building wealth, especially if you're looking for a less risky way to invest in the stock market. For example, funds like VIM or CDY focus on companies with strong record of paying dividends. By investing in these funds, you're essentially setting up a system where your money works for you, generating income without having to do anything. And over time, as these dividends are reinvested, your income stream grows, leading to significant wealth accumulation. But here's the catch. Don't invest in any dividend payment company. You want to look for companies with a stable and growing dividend history. This way your doing homework pays off. And while it might sound boring, remember, the boring often means reliable, primarily when investing. And don't forget the tax perks of dividend investing. In many cases, qualified dividends get taxed lower than regular income, making them even more appealing for building wealth. Plus, dividend-paying companies tend to be more stable and less volatile than non-dividend-paying stocks, which can cushion during market downturns. It's a win-win strategy that should be a part of any well-rounded investment portfolio. And if you are looking for a way to get started, consider setting up a dividend reinvestment plan, DRIP. With a DRIP, your dividends are automatically used to buy more shares of the stocks, allowing you to compound your returns over time without any extra effort. It's an easy and effective way to build wealth with the magic of compounding. Finally, let's talk about paying off debt. You might not see this as an investment, but trust me, it is. Every dollar you pay off is one less dollar racking up interest. It's like a guaranteed return on your money. For example, let's say you have a 4% interest rate loan. By paying it off early, you're earning a 4% return because that's interest you won't have to pay later. This is super important if you got high interest debt like credit card debt. With interest rates over 20%, paying it off that debt fast is one of the smartest financial moves you can make. It frees up your cash flow, reduces financial stress, and gives you more money to invest in other opportunities. By paying off debt isn't just about numbers, it's about peace of mind. Being debt-free lets you make financial decisions based on your goals, not your obligations. It's about taking control of your finances and ensure that more money goes towards building wealth, not paying off interest. With economic uncertainties and potential interest rate hikes in 2024, reducing or eliminating debt should be a top priority. It's a low-risk, high-reward strategy that will give you more financial flexibility and security. And remember, once that debt's gone, you can start investment that money, speeding up your wealth-building journey. This is an intelligent move that sets the stage for a long-term financial success. What is the secret of successful investing? Patience and consistency. Don't try to get rich overnight. Focus on making smart decisions and let your investment grow with time. Thanks for sticking with me till the end, and if you found this video helpful, check out my last video. Don't forget to like and subscribe. See you next time and happy investing!